the term expense to apply to a very specific type of entry. An expense is a transaction where your club pays for something that is not a stock purchase or a member withdrawal. Money is taken out of your club assets and used to pay for the expense. For example, your bivio subscription is a club expense. A typical investment club will have very few expenses. As we'll be discussing, any expenses which you record will affect your investment returns, and most things you record will not provide you with much of any tax benefit. Despite this, club expenses tend to raise a lot of questions and take up a lot of unnecessary time for club treasurers. There is a common misconception that there's a way for club members to make contributions to a club to pay for club expenses, which will be kept separate from contributions being invested. This is not the case. As we discussed in the orientation webinar, no matter how many club financial accounts you are tracking in your club accounting, for the purposes of the accounting, all of your assets are available for investing or for paying expenses. Record all cash that comes into your club from members as a payment, no matter what it's going to be used for. Here's a little overview of what you need to know about expenses. Everybody always wants to know what expenses are deductible, so we'll talk about that first. Then we'll talk about how expenses are allocated or divided up between club members. I'll show you how to enter expenses in bivio. And finally, I'll show you how to reimburse a member who pays a club expense either with a check or by giving him or her additional units. Only certain types of club expenses are deductible. The definition of what is and is not deductible is found in IRS Publication 550, Investment Income and Expenses. Note that your club accounting is designed to account for your investment portfolio. You have investment income and expenses, not business income and expenses. Deductible expenses include things like your bivio subscription, meeting room rental for your club meetings, postage and office supplies, fees you pay for counsel and advice about investing, which could include a club subscription to Manifest Investing or Value Line, DRIP plan service charges. These are charges that are subtracted before the funds are used to purchase stock. If you rent a safe deposit box, you're allowed to deduct the percentage used for investment-related activities. If you have any question about whether something is a deductible expense, refer to Publication 550. Things which you might think are deductible but which are not include expenses to attend stockholder meetings, expenses to attend investing conventions and seminars, food and refreshments, gifts, club parties, flowers, and stock purchase and sale commissions. You do track these and they are important for determining stock basis, but they are not entered as expenses. At the end of the year, any deductible expenses that have been allocated to you for the year will be reported to you on a K-1 form that you will receive from your club. It will be shown on line 13 with a reference code of K next to it. If you itemize your deductions on your personal taxes, club expenses will be deducted on Schedule A in the category Miscellaneous Itemized Deductions. You'll only be able to benefit from the deduction if the total in this category exceeds 2% of your adjusted gross income. You record an expense in bivio this way. First, go to the Accounting Accounts page. You'll see a button labeled Expense. This will open a form where you can fill in the details about the expense. You'll pick the account you paid the expense from, the date you paid it, the amount, whether it was deductible or non-deductible. We give you a menu of choices of the most common investment club expenses. This box here, Allocate per Partnership Exception, should be selected if you want the expense divided up in the same amount to each club member. We'll talk a little more about this later. Finally, you'll see a remarks box where you can enter any notes that will be helpful to you in your record keeping. If you have paid for this expense with a club check, this is a good place to make a note of the check number. After you fill in the form, you'll see the expense entered in your account transaction list. When expenses are recorded in your club accounting, they're divided up and allocated to each person who's a member of your club at the time they occur. The default method of allocating expenses is by percent of ownership in the club. This is the same way that income, such as dividends, is allocated. Percentage of ownership is tracked by the number of units each person owns. Expenses are allocated as they occur based on each member's ownership percentage at the time they occur. Percentage ownership in your club may change each time payments or withdrawals are recorded. Here's an example. Here's a club where on May 1st, these members own these percentages of the club, and they had a deductible expense on the 18th. So it was allocated to each person based on their ownership percentage. Now if for some reason on the 20th their ownership percentages changed, maybe somebody made an extra payment or somebody made a late payment. Anyway, on May 20th they had different ownership percentages. So when on May 26th they had another deductible expense of $100, it was now allocated based on the new ownership percentages. As you can see, the specific transaction date and the sequence of each of your club's transactions is more important than in other types of bookkeeping you may have done. If your partnership agreement allows it, expenses can be allocated in an equal dollar amount to each person. If you would like your expenses allocated this way, you would check the per partnership exception box that I showed you on the expense entry form. It's called per partnership exception because your partnership agreement must specify that this is an allocation method your club has agreed to. When an expense is allocated this way, each member's account is reduced by the same number of units. Because of this, everyone's ownership percentage will change. Here's an example. Suppose on 5/18 you had 100 units in your club and each one was worth $10. Each member owned this many shares and therefore had this ownership percentage. Suppose you had a deductible expense of $100 and you wanted each person to be allocated $20 of the expense. You would check per partnership exception on the expense entry form, and $20 worth of units, or 2 units at $10 each, would be removed from each person. After the expense was entered, each person would own this many units. As you can see, this would also change their percentage of ownership in the club. While some may consider this method of allocation equal, members with lesser ownership percentages are bearing more of the brunt of the expense. Note that there are only 2 ways to allocate club expenses. In both ways, they are allocated to all members of your club. There's no way to allocate an expense to a single individual. For example, if some members want to subscribe to something but others don't, or different people want to subscribe at different levels, this is an expense that should be handled outside your club. In addition to subscriptions, another individual expense that comes up frequently is restaurant meals. Suppose your club had a dinner at a nice restaurant and the total bill was $200. Suppose you had your club treasurer write a club check for this total. When she went to enter the dinner expense, she would have 2 choices on how to allocate it to each member. She could allocate it either proportional to their ownership in the club, in which case they would each be allocated these amounts, or she could allocate an equal dollar amount to each person. That would be like splitting up the check equally. She does not have any way to allocate the expenses based on what the members actually had to eat. This cannot be emphasized enough. It will seem as though any expense related to your club or your club members should be paid for using the club accounts, but this is not true. If you do not want to allocate an expense equally or proportionally to everyone, don't use your club financial accounts to pay it. There is no benefit to doing this. Your club accounting will not track the tax benefits the members might achieve, and recording the cash that moves around in your club accounts requires complicated entries on your treasurer's part. Members should pay these type of expenses themselves and keep track of the taxable expense individually if they want to claim them as a deduction. Since clubs cannot have credit cards, it's often convenient for an individual to pay an expense and then for the club to reimburse him. There are two ways you can do this. You can write him a club check, or you can reimburse him with units of ownership in the club. You might want to do this because it will not change the amount of cash your club has available. It also might allow you to operate without having a checking account. In addition, it may result in quicker payment of expenses if you don't have to wait for a check to clear. So first let's talk about reimbursing a member with a check. Reimbursements sometimes get a little confusing because there's no specific reimbursement transaction. Instead, you record the expense as if it had been paid directly by the club. You might write a club check, but the check goes to the member who paid the expense rather than the group that provided whatever you're paying for. So it works this way. The club will incur the expense, the member will pay the expense, and then the treasurer will write a check to the member to reimburse him. But you don't enter this as a check. You enter it as an expense using the expense form. You just make a note of the check number in the remarks field, as well as what the expense was for. You can also reimburse a member with units of ownership in your club. Conceptually, it works like this. First, the member pays the expense. Then you record the expense. It's allocated to everyone, so it's as if each member has chipped in to pay it. You could give a member a check to reimburse him, but instead you hold the money in a temporary dummy club account, which you can name something like reimbursement or out of pocket. This money is then used to record a contribution from the member being reimbursed. It's as if you gave it to him and then he turned around and used it to make a new payment to the club. You don't actually have to give him a check, you just record the payment. Here are the actual steps you would go through to record this. First, if you don't already have one, use the Create button to create a new account on your Accounting Accounts page. Call it Reimbursements. You use a temporary account because there won't be any transactions corresponding to these in your financial account statements. Then you open the expense form using the Expense button. Record the expense as being paid from the reimbursement account. After you make this entry, you'll see there will be a negative balance in the reimbursements account. It will have a negative balance because it's an amount that has been removed from your club assets to pay the expense. Next, you record a payment for the member being reimbursed. Use the payment link next to his name on the Accounting Members screen. Record it as deposited into the reimbursements account. The amount taken out in the first transaction is used to purchase additional units in the club for the member being reimbursed.